Welcome to Options Impact Video Education. This is Tier 2, Outright Options Positions. Cluster 2, Naked Options. Title: Advantages and Disadvantages of Short Options. For Market Taker Mentoring, LLC, at www.markettaker.com. First, we'll start with our disclosures and disclaimers. Options are not for everyone. You should read the characteristics and risks of standardized options before trading. You can get a copy at 1-888 Options or by visiting the Options Clearing Corporation. Fantastic. Let's get started. Today on our agenda, we're going to talk about the advantages. So we're going to talk about our upside potential, our theta, income generation, and then we're going to move into our disadvantages. These are only directional bets, and the maximum potential losses, which make these so risky. So let's dive right into this. And we're going to be looking at our upside potential and our downside risk. So here we have two positions. We have a put and a call, and they're both short. And both the put and the call have a strike of $50. The put has a cost of $2.50, and the call has a cost of $2. Now, if the stock price started to increase in value or decrease in value, the short trader would lose a significant amount of money. This risk is what makes short traders very risky, and why most brokers do not allow beginning traders to have naked short positions in their portfolio. It is too much risk. Theta. So in a long position, every day that goes by, the option declines in value. But this is good for the short trader. And every day that goes by that the stock doesn't move is money in the short trader's pocket. So this is a good thing. So the long options, again, lose a little bit of money every single day due to this time decay. But that makes it that much more valuable for the short trader because there's less of a chance that the option is going to go against them and the position will be assigned, causing a potential large loss. So the short options actually gain theta. So all of that little bit of time loss that the long options lose, the short traders actually gain. So there's a nice advantage of being short. And then once the option starts to get closer and closer to expiration, that theta is going to have a very large impact on the price of the option. Now, what are some of the disadvantages? Again, these are only directional bets. So if you are short the call, you're making the bet that the stock isn't going to increase in value. And if you're short the put, you're making the bet that the stock isn't going to decrease in value. And there's limited potential return. So for a long call and our long put, there's a huge amount of potential return, which is what makes those positions very attractive. Versus for a short position, the most money you could ever make is the amount of money you sold the option for. So it's a very finite amount of money that you can make given the amount of risk that you could possibly lose. So the risk to reward ratio is not skewed positively for the short trader. Additionally, there's a very limited ability to manage risk when you're short options. There's nothing to protect it against, especially if you're naked, these options. That naked means there's nothing else protecting it. So you've got no other hedge on, and your position is just there, and if it starts to move against you, it can start to move against you very largely. And this is potentially very bad for you. And again, just to emphasize, the unlimited potential loss is huge for short option positions. This is the reason why beginning traders typically are not allowed to have naked positions in their portfolio. If the trader is unable to cover the loss generated from this position, the broker will be on the hook and will have to pay for it. And the broker will be very cautious about letting new traders get into these types of positions because they won't be able to handle said risk of those potential losses. Now, on the other hand, if you had an additional position, you can actually limit the loss. So you can adjust the risk and the loss potential by buying a long call if you're short a position, or buying a long put. There's lots of different ways to manipulate it, but if you're just short a long or short a call or just short a put, you're very exposed. And this has been a presentation of Market Taker Mentoring, LLC.